The world's most indebted property company, Evergrande, will not destabilise the financial system, so say China's central bank and regulators. The real estate developer has liabilities totalling more than $300 billion and still can't meet debts. David Mahon is executive chairman of Mahon China Investment Management.
Well, Evergrande is going to be dissembled, but it's a managed breakup of a company down to a shadow of what it was before. Well, what's important is it's not a collapse. This is not the Lehman moment that has been used as a tag in the Western press. So the point being that really, if you look at the general situation, it's the Guangdong government, very much backed by the central government of China, to make sure that first the depositors are given their deposits back, the householders that have invested in the apartments to come. That won't happen. Then the employees will be looked after. That's very normal under Chinese insolvency law. The stakeholders that will probably do the worst will be the international bondholders and the Chinese institutions that are holding paper related to Evergrande. So I think this is a situation that won't be good for the company, but China's been through this before. Mahon, of course, is a previous property collapse that was managed by the government.
So is this a sign that the government is changing its mind then on how to deal with the floundering property sector?
Well, the property sector isn't floundering. Some of the largest speculators are being reined in. And this comes along with the, I suppose, the principle and the spirit of what was behind Alibaba, what was behind the government's approach to Didi, where you had very large companies involved in multiple sectors, particularly in the financial sector, without the asset base or the regulatory structure to actually operate as a financial firm. Now, Evergrande is not ultimately a financial firm. It's a property company, but it has been issuing wealth management products. It issues bonds. So in essence, it was beginning to go beyond its core discipline, which was building large property projects. Its owners bought a football team. There's a huge $1.7 billion stadium being built in, I think it's Foshan or near Guangzhou anyway, which was the vanity project of the principals of Evergrande. So this is a move which will continue and try to take some of the hubris and risk out of the Chinese economy and companies of scale in a number of sectors, not just property.
So how severe could the impact be on the real economy?
I don't see it having, at this stage, a major impact. There's not a domino effect within the sector. And already the government had been curtailing property lending in the coastal provinces. So while you could buy a first home and get a mortgage, normally at a very high deposit rate, 30 to 40%, you couldn't do a second home to speculate on it. That was very much more expensive. In many cases, you had to pay cash. So through the banking system, the government's been restraining the property sector somewhat over the last 3 to 4 years. And one of the things it really wants to avoid is that the banking system will become very heavily based on assets related to mortgages, something which the Western banking system has always been heavily leveraged on or heavily tilted towards. So in this case, China's learning from the mistakes that we've not learned from. Post the global financial crisis, there are as many derivatives and as many unstable abstract financial instruments out there that would put our banking system at risk. So post 2008, 2009, the government's taken a very conservative view of banking and the leveraging of big firms like Evergrande.